So what will this inquiry look into specifically, and is there any risk here of holding too many inquiries into the bank and layering them up with too much regulation? I spoke to the ACCC chairman, Rod Sims, earlier. Rod Sims, thanks very much for your time this afternoon. Can I start by asking, what sort of information will you be able to access through this inquiry that you can't already get your hands on?
We'll be able to get hold of financial information that's obviously internal to the bank. We'll be able to look at decision-making documents, really to find out what decisions are being made by the banks and why they're making them. So unlocking the information powers that we have is a really important part of this inquiry.
So you'll be able to have a much clearer view of the cost of funding for the banks and whether indeed they can afford to pass on more of the Reserve Bank's interest rate cuts.
We'll be able to look at their cost of funds and, yes, how they're moving and what effect that has on their decision-making, but also we'll be looking at their decision-making in itself. And I think that's really important so that people understand how these decisions are made and why they're made.
You did have an inquiry last year when the bank levy was introduced, specifically looking at mortgage pricing and whether they were exploiting the introduction of that bank levy. Will this be very different to last year's inquiry?
This inquiry will be different to our recent residential mortgage inquiry. That previous inquiry was very much about whether the levy that was imposed by the government was passed through. That's what its terms of reference required us to look at. Now, we've obviously got a lot of information out of that. We've learned a lot. We know a lot about bank processes, so I think that would allow us to target this inquiry a lot more. And this inquiry will go a lot deeper. It will look at costs of funds and things like that, which we really didn't look at in the previous inquiry.
There was that inquiry. Of course, we've since seen the Royal Commission into the financial services industry, and there was also last year a Productivity Commission inquiry that did look specifically at competition in the banks. Can you give us a sense of what hasn't been covered in all of these various inquiries that still needs to be looked at?
The way we do our inquiries is very much investigative techniques. It's very different to the way the Productivity Commission does their inquiries. So we'll be seeking to gather information, as it were, interrogate that information and be able to follow lines of information that are internal to the bank, understanding their decision-making processes. So it's going to be a lot more detailed, on-the-ground type of investigation, and I'm certain it will come up with new insights that everybody will find interesting.
Nonetheless, I think only 2 of the 34 Productivity Commission recommendations have been implemented by the government. Would that be a good starting point to see further action on those recommendations?
Oh, look, that's up to the government. The Productivity Commission recommendations were obviously important. They were done pursuant to a different type of inquiry. Our inquiry, as I say, is going to be very much on the ground, investigating the data, investigating the decision-making processes. The way the ACCC does inquiries is very different to the Productivity Commission. It's great to have both involved because I think both approaches add a lot of value.
Still, the banks clearly think they've been poked and prodded enough by now, and some in the government obviously fear too many inquiries into the banks. Liberal Jason Falinski, I think, told you at a committee hearing last month, quote, over-regulation of lenders was hurting competition from smaller lenders. The industry should be given a chance to absorb the major regulatory changes that have been made and that are coming. I mean, is there a risk that too much inquiry slows down lending that the economy really needs?
I don't think so. I think this is all about transparency. I think there's more transparency we need about how banks make their decisions and why. So, and this isn't regulation, of course, this is just transparency. Yes, we'll be asking for documents and things like that, but I really think you're talking about a small number of bank people involved in giving us what we need. So, no, I don't think it's going to affect their ability to run their business as they do. What it will do is provide a lot more transparency around, as I say, what they're doing, why they're doing it, and that transparency can only help consumers and the community at large, I think, in what are really important decisions for the Australian economy and Australian consumers.
You're not just looking at how Reserve Bank rate cuts are passed on or not passed on, you're also looking at, in this inquiry, the interest rates that new customers are offered compared to existing customers. This is the so-called loyalty tax effect of those who've stuck with the one bank. Do you accept, though, that banks need to entice new customers, they may need to offer a discounted rate?
Oh, look, we understand that you offer discounts for new customers, but what we have in Australia is quite a big gap between the headline rate, the standard variable rate, and the rate that people actually pay, particularly new customers. And so that can be quite confusing for customers, and we want to understand how that all works. And of course, those pass-throughs, to what extent do the way banks react to a Reserve Bank change, to what extent is that different between new and existing customers? These are all really important issues, I think, to get a better understanding of.
I mean, bottom line, it'd be great if it was much simpler to swap banks to chase the best rate that's available. The government's been doing a bit on this front, but I know you've still got to do the inquiry here. Do you think there are still too many barriers to changing banks to chasing a better rate?
Oh, look, I think there are potentially a lot of barriers to consumers getting better rates and changing banks. We, the ACCC, are working on open banking, the consumer data right that will allow people to take their data from one bank and pass it to another one and ask them immediately, can you do me a better deal? I think that will help people switch in a really important way, because at the moment it's quite tedious to provide all the financial information to an alternative provider. This will make all that a lot faster. So that's something that's coming anyway. But just seeing what else is being done, seeing how the banks think about how they deal with their long-standing customers versus how they deal with new customers, I think all this is helpful. I mean, banking is such a fundamental industry for the Australian economy and for Australians. It's really important that we understand exactly what's going on here and why things happen as they do, how banks may seek to, for example, take advantage of behavioural biases. We can look at all of these things in the course of the inquiry.
Finally, Rod Sims, how long will this take before you've done your work and report back?
We'll put out so we're starting today, we'll put out a preliminary report at the end of March, and we'll put out a final report at the end of September. So this will be a fairly quick exercise, detailed, but a lot to do in that period of time. I'd like to think that in the March report we'll be providing interesting information that will therefore give us some fairly quick returns out of this, and then our detailed report at the end of September.
ACCC Chairman Rod Sims, thanks very much for your time this afternoon.
Thank you, David.
Rod Sims, the ACCC Chairman, talking to me just a short time ago, making it clear there is a need for this inquiry and where it's different to the several inquiries that have preceded it, including into competition issues at the banks. We're going to talk more about this later, about what is likely to come out of all of this. It'll take a while before the final report, nearly 12 months, but an interim report, a draft report in March of next year, in time for next year's budget. What are some of the areas that could further put pressure on the banks to pass on interest rate cuts and make it a little easier for customers to switch banks and banking arrangements to chase those lower rates?